All right. What a great week. Awesome week. Made some major progress in stocks and S&P 500 futures, just sticking to the same theory about where we're going with the markets and what we're actually doing. And from end of April, early May, I've been talking about the long trade, and it was almost like if you did not have the knowledge going into this year after the correction, if you were just a blind Robin Hood Davy day trader, you could have made your life a lot easier and probably made more money along the way just sticking to the long trade instead of having to worry about all of the other noise that's in the background telling people that you can't long this market, the fundamentals are too bad, the fundamentals are crazy, but you can, and the price is king, and it shows you exactly what you need to know despite all of the bearish sentiment out there by all the commentators. So what I'm going to do is I'm going to walk through some of the important landmarks that we actually made, starting with S&P 500 futures. One of those big landmarks was this February 21 gap that I've been talking about for a long time, just weeks as far as a target. And it looks slightly different on SPX, and I'll go into that in a second. But we finally cleared this gap, which was at about a little less than 33.40. And that's where we cleared. I've got this thing moved over to the side a little bit earlier this week. And the moving averages are stable. I use the 21 EMA and the 50 DMA mostly to view the stability of any kind of moving averages. These are currently very stable, and they're still increasing. And I view that they are still going to increase. And we're following the election year seasonality move, which was undetermined right at the end of July, early August. But now I am almost certain that that's what we're actually doing, and I'll get into that in a little bit. So we are extremely close to an all-time high in S&P 500 futures, up near almost 3,400. We're almost there, and we're getting extremely close now, 50 points away from making that all-time high. So I have no doubt that that's what's going to happen, but are we going to have a blow-off into this September seasonality end? I think that it's possible. I think that that's what's actually going to happen. The shape of this move, the shape of the candles, and the shape of the actual progress over time leads me to believe that we're doing something like one of these S waves that I always talk about that has some kind of a sideways movement in the middle, an initial impulse at the beginning, some kind of a sideways to up movement. Sometimes it's just gradually sideways, sometimes it's holding an upward movement, and then it finishes off in a similar way compared to where it started. So it's a similar representation on the tail that it is at where it first started in the beginning. And this might happen just in time for election year seasonality to end at the, and I'm going to try to align this on September 1st because that's where it actually ends. So something like this movement is what I think could actually happen in the next couple of days, bring us to an all-time high and take us in this big V bottom that turns out to be a kind of a capitulation top, maybe from 3,500 to 3,600. That, I know that sounds like a crazy prediction, but I've seen these types of movements many times before, and they tend to work out more often than not. And the fact that we're moving into this end August-September seasonality cycle with gold and with bonds makes me believe that it's possible. So this big February 21 gap was so important to actually fill. And if you look at these SPY blocks, that I like to look at. This same February 21 gap looks a little bit different on something like SPX or SPY. And forgive me for all of the block levels, because we in the Daily Edge use the dark pool block levels to show us support and resistance over time. Since futures have decay associated with them, similar to options, the spot price is different. We actually we actually were bumping up against the bottom of this gap, which is February 24th. February 21st occurred on a Friday. February 24th was a Monday. We bumped right into the bottom of this, and I've talked about this a few times in previous videos. Right at this was the June FOMC right here. And that's what this level was. And combine that with the hitting of the 40 million block level here for December 20th. And that generated a pullback to this 53 million dark pool block level from February. And we kind of bounced around in between here, but we are finally reaching some kind of escape velocity here and hit this next big target that I laid out in last week's video for this 20 million block level. I don't have a lot of the other dark pool block levels shown because I only like to concentrate on anything that is a 10 million share block, a dark pool block level or higher. So the next target would be this 17 million block level from February 21st. And then after that, it's just a hop and a skip to all-time highs. So this is very bullish price action, this wave that we're doing, and it could end with a bang here in the next 2 to 3 weeks. So the last, not the last video, but the one before that, I described how for seasonality we wanted to see some kind of stimulus plan to knock us into the election year seasonality for DJI. And if we look at what that election year seasonality is, right somewhere around leading into the FOMC, actually no, this is regular, what is this? This is election year seasonality. Usually there's some kind of a buy-in into the late July and early August FOMC. So, and then it just rallies all the way to September 1st to September 4th about into the next quarterly FOMC. The quarterly FOMCs have one of these asterisks on it, and it's colored in blue. And that is kind of what we are doing. A little late to the party here on July 30th instead of July 27th, but these are just averages. So you have to imagine this is the collected average for the last 9 elections since 1980, not including this election for 2020. So it's going up to 2019, which is non-election years. So up until 2016. 1980 to 2016, just election years. And it looks like that we can definitely commit to this rally for the next 2 to 3 weeks. I don't know how strong the rally would be, and I thought that at the last moment in July, it was no coincidence that July 31st was the deadline for the pandemic unemployment assistance, the PUA, the $600 a week, would actually end on July 31st. I thought that Congress would have an emergency rollout of new assistance. Instead, we've got Trump with his fake stimulus that's coming out, but maybe the market will use it as an excuse to go higher anyway. It's about 10 minutes to futures open on Sunday night, and it looks like weekend IG is actually pumping for a 60-point open. I don't know if that's actually going to hold and we just rally higher, but we're about 60 points gapping up on the open as the projected. So let's see if we actually commit to this DJI election year seasonality, and it's very possible that that's actually what's going to happen. If we look at Dow Jones last week actually broke this descending trend line. If I hide some of these guys here that I like to use, I'm a big fan of those Dachi Unclosed channels for 21 and 55 day or week. we had a golden cross on, let's see, either Thursday or Friday we had a golden cross on Dow Jones futures. I think that we can go a little bit higher in this movement, and we broke this dotted trend line finally after hitting it multiple times. We finally broke through after back testing the 200-day and the 50-day moving average multiple times to actually put us through. If we zoom out here and I show what these trend lines are, this white trend line that I'm going to color a different color here, this pink trend line, if you connect the top of February 2018 to the top of October 2018, it shows that it's big resistance over time. And this is what we kind of hit earlier in June. Remember, this is the June FOMC back here, right here at the top. This guy right here. So that big trend line there was definitely a huge resistance, and I don't know if we can pass it again. We might just consolidate sideways and go higher and then hit this trend line again and maybe not break it. I'm not sure. A golden cross, I've never seen Dow Jones make a golden cross in a bear market. So this is not a bear market. Nasdaq is making all-time highs. We're not a bear market for price, and price is the only thing that actually says that we're in a bear market. And I suspect that this can actually go higher. This 78.6 Fibonacci level from the top to the bottom of the virus correction, that was passed this week again, and this was also just another resistance point along the way. So I think that we can actually go higher, but this is going to be a trouble spot here. Russell 2000 finally had some major movement last week after finally getting above multiple resistance levels that just took forever to escape. And we managed to clear the month R4 Camarilla pivot and the 78.6% retracement level right around 1550 at the same spot. So this is kind of bullish. I don't like that we're hugging this parallel channel bottom here, but if we can draw some serious steam and get up to maybe the middle of this channel, that would actually be kind of a bearish divergence, and right at the end of August would be the seasonality endpoint for election years, and I suspect that there would be a good short when that happens, and it could be a big bearish divergence. If you look at normal RSI 14, we're not quite overbought again. So far, this is actually some kind of a bearish divergence, but that only makes sense if you don't keep moving higher and clear this high for the RSI back here. But so far, bearish divergence, and usually a bearish divergence in a parallel channel will exhibit itself by the price making it to maybe the middle of the channel, or in a really bearish sense, just hug the bottom of the parallel channel somewhere to a new high compared to the previous high, and then just completely die off and maybe come all the way back down to this trend line here. So it's very possible that we could do that and come back down to maybe the 200 or the 50-day moving average eventually. So we talked about the SPY blocks, and we talked about where we're going, and we're above the major SPY blocks, and that's bullish to me. And if we go to looking at the QQQ trend, which is Nasdaq 100, we're still in a bullish trend here, still managing to move up. This is a regression trend attached to this pivot low and all the way up to the top here for the pivot high point. And I think that this is showing that it's possible we could continue to go higher on lower volume. It doesn't really matter if the volume's lower. As a trend goes higher, the volume always gets lower. But we are following this middle section of this regression trend here. And I suspect that it's going to start to show some weakness here in the next 1 to 2 weeks. Stuff is just pretty overbought on tech. And there was a big rotation on Friday. Tech was down something like 1.2%, and Russell 2000 was up in a solid way. So the professionals keep doing these massive rotations to search for the yield, and it's getting more severe. If you look at Apple, Apple's just insane. And the same regression trend is showing that we had a big hit here with some kind of a ABC correction. And then into earnings, I talked about that huge dark pool print for 2 million shares. That was a dead giveaway going into earnings. If you went long on that, you'd be up somewhere between 12 and 15% now, I think, from that moment. And this regression trend is definitely showing that we're getting to a point where we could probably be overbought. I'm not sure. We could make a higher high here and then possibly come down. This is all predicated on election year seasonality into September, and the VIX futures curve, which is also showing that there is a major top in the market predicted somewhere between September and October going into this futures profile for VIX. We're at 13% contango right now, and this current expiration for the August contract is not till the 18th. So not this Wednesday, but the next Wednesday. This is solid contango, meaning that 13% contango, if you divide, if you do 30 divided by 13, what is that? Divided by 100. So VXX has to decrease a little bit over 0.35% per day by what that actually means. So selling calls on VXX or buying puts is currently very profitable, but this is slated to only last a couple of more weeks here until we get to this October top. And the only way that this curve is possible on the other end is if the VIX spot jumps all the way above 30 and the entire curve is in backwardation. So there's a huge expectation for volatility going into the election, which is after October, which totally makes sense that the next expiration is after the election. So it totally makes sense. Talked about AMD last couple of weeks, and I said what a buy this was way back here in June, and I started talking about it with all the dark pool activity that was happening. These are the dark pool blocks for 500,000 shares, 1.5 million, and there were a lot more in here that I'm not showing. And I set the first target somewhere around the 1.618 extension, completely blown past that. We're all the way up at 85 now. So what a trade this was. This was an insane long that's just had a crazy return. If you look at high yield bonds, which are always really important to watch, because high yield bonds will show you where there's market weakness. So coming into the end of January, February earlier this year, there was a lower high in high yield bond yields, or high yield bonds, not the yield, and there was a higher high in the stocks. That was some kind of a divergence. This started showing incredible weakness immediately. It was time to get out. This is not really showing that kind of weakness yet. You would have to see an even greater weakness. And in the past, if you look at the past, it's shown even greater divergences really early on in a sell-off that are easier to identify where a possible top could be. So I look at the high yield and the ICE Bank of America high yield index, and if you go back in time, big spikes in the yield show that there's going to have this precipitous sell-off over time in order to show you where the next possible top of the markets are. So we're not even there yet. We need to decrease a lot more, just like these last instances, to really reach some kind of a definitive peak, that I would say. This is 2009. Obviously went way higher because there was a crisis in the bond market. But you can map end of QE1, end of QE2. Somewhere over here was end of QE3, and this was a big bottom in early 2016. Everything tanked again. Not quite what we have today with the huge spike up, but this needs to come down more to represent these last big movements. So overall, I'm bullish on stocks just based on looking at the right instruments and not really focusing on fundamentals right now. That's okay, because if 1999, 1998, 2000 are a reference point, this can keep going. for a little while longer until stocks get truly overbought. I thought that this interesting chart here for Japanification of what the stock market is doing with the intent for yield control by the Fed and a never-ending printing press to cover liabilities from not just, corporations now, but direct handouts to citizens. So Japan, if you're not familiar with it, had a massive blow-off in real estate in the early 90s. And the amount of printing that they did was unprecedented. And real estate rose to a bubble that far exceeds anything that we ever saw in 2006 and 2007. So much so that they were pricing real estate down to the square inch, not to the square foot, to the square inch. And we have kind of been following this path in the German 10-year yield. The same thing that if you shift the Japanese 10-year yield forward, it's really interesting the path that we're following into negative interest rates. So Germany is fully negative interest. I think it's either at the end of 2018 or 2019 that their last Bund, the 30-year Bund, went fully negative. So it's really interesting what's actually happening here in the markets. I thought that this graphic was really funny for Kramer. I saw this. I don't know if somebody just overlaid this graphic of bull market with a vaccine and government aid. Definitely a bull market. Vaccine and no government aid, bull market. And no vaccine and government aid, bull market. No vaccine and no government aid, bull market. And that's just goes to show that if you have an active Treasury and MBS bond buying program in all of the previous QE cycles, one of those has had to top in order to have a market top. And I've gone into this a few times with S&P 500. When we look at it, I've gone into this a few times. And if I hide some things here and look at this guy here, where we go back in time, I've shown this graphic a few times that there's never been a market top in the markets without one of these programs showing a top. And it's either the Treasury buying program, which you can look up on Fred, or it's the mortgage-backed securities that shows a top. And I've shown this a couple of times where this is kind of the end of QE1 right here, and you had a top in mortgage-backed securities. Here's the end of QE2. You had a top in U.S. Treasuries. And then QE3 was crazy with both MBS and U.S. Treasuries. And the stock market just rose in a constant slope the entire time. Somewhere around here, this was kind of the end of QE3. Market went sideways for a little bit, then a big correction. Here's repo right here, and then here's where the MBS kicked in again along with Treasuries, and this is where we currently are today with the current programs that have no sign of a slowing and no indication from the Fed of a slowing. So that's why we can continue to have this bull market despite, the Fed, despite fundamentals just not agreeing. I went into this bond trade that I started with a week or two ago, and it's not performing the way that I wanted it to, but it was doing pretty well right up until this last week where it kind of fell off a little bit. I'm holding about half of that trade left, and this was the move. Right around July 27th, on average, is the biggest move of the year for the last 10 years in 30-year and 10-year bonds. So I started buying ZB, the 30-year bond contract on CME, heavily right around this area. Planned on holding it to this September 1, August 31 date, and I plan on still holding it. This is a calendar trade, so I don't really care what the price does. because every time that I try to get out early, it just keeps going higher. So I've been fiddling with it a little bit, buying back at Camarilla pivots, big support levels, and then selling it into strength and ending up with the same amount of contracts that I started with. But there's only a week or two left in this trade, and so far it has been an absolutely great trade getting into these bonds. The same thing for gold. Gold bucked the trend a little bit on its seasonal profile that says that we should start to have a huge rally beginning in early August. And it extends, same date, all the way to 1st of September. So one of the biggest rallies of the year for gold is right into this date that shows that it ends right around September 2nd. So we could have a pullback here. If this is showing that there's some kind of a pullback in mid-August, that's fine with me. I'll just buy more and hopefully get this trend. But overall, I'm super bullish on gold, and I have been for a while. I talked about the gold trade many months ago to get into gold and silver. And gold futures have almost reached that target that I set out a while ago. And this is just one target. This is the inner target of an inner cup and handle, the outer cup and handle that you can see on some other graphics that I have show that the ultimate target is somewhere around 3,200 to 3,500, just based on measured move targets alone. So there's a little handle back to the 50-week moving average, and the measured move is somewhere around 2,100 for futures price. And that's almost where we stopped at earlier this week, just shy of that 2,100 target. And the volume has definitely picked up in the futures price. So we're almost there. I definitely took a lot of profit in the last week or two, and I'm still in some gold, but not as much. Wanted to go over this trade. 10-year yields from the closing price have reached new lows compared to 2012. So this is just yield curve control that we're going to experience most likely. One of the things that a graphic that I showed before was something that I took off somewhere. I can't remember. I guess this is FactSet. Somewhere on the internet that I stole. Last quarter, the quarter before this, we had 16.4% in earnings. And so far, we are showing that we are going to, and this is showing a graphic on what to expect the next quarter. And the average is about 9.5% beat in earnings. Next 2 quarters, next 4 quarters, where the normal projected earnings are after you get a quarterly gain of a 15% beat or greater. And these should be familiar dates. 2020, 2009, 1998, like I talked about before, where you had a big Fed intervention for a currency crisis. 1987, after the 1987 crash. 1982 was another big year. So we're kind of following really oversold years that result in massive rebounds, of course, assisted by the Fed. According to FactSet, which I follow for the weekly report by this guy, John Butters here, we have fulfilled 89% of the companies have reported their earnings. And what it is showing is that, what do we got here? Final percentage of the quarter will mark the largest earnings surprise percentage reported by the index since FactSet began tracking since 2008. So we are definitely on track for having some super surprised overall earnings of the S&P 500. So we are starting to see some breadth, and if you look at the value G index that I was looking at earlier, let me see if I can pull this up on the chat here. One second. And let's see. looks like I posted this information earlier. Hold on, bear with me 1 second. Here we go. So some of the things that I stole from this guy, I can just quickly put into an IMGR UR guy right here. And NYSE hitting the percentage of stocks greater than a 200-day moving average and highlighting several locations in the past where we have hit this big oversold level down at like 15%. And I talk about this all the time in the group, that I have a bunch of indicators that are showing this stuff live when it actually happens. 5-day percent stocks above the 5-day, 20-day, 50-day, 100-day, 200-day, 150-day. All its key overbought and oversold levels. And it's really interesting every time we hit this and what happens after we cross under 15%, cross back above 50%, what the market does. And Javaco just usually likes to say, really good things happen, which is all these green bars that you're seeing here. That once it crosses over oversold and comes back to above 50% stocks, above the 200-day moving average, that we usually see a sustained rally during that time. One of the other things that he talked about was this value G index, which is the equal weight index, which is easier to show growth. And the value line geometric index is the equal weighted index. And what he was showing was when you get down to a severe rate of change and then cross back up a threshold of, I think what he was looking at was the 94-day rate of change, because there was 94 days back to the bottom in the stock market in March. And it's only happened a few times. We don't have a lot of metrics here, but you're seeing key dates again, 1982, 2009, 2020. So the rate of change increase is showing that there is sustainable growth in this number to continue higher. So people that are arguing that there's not enough breadth, they're going to get surprised once value stocks, which are severely oversold compared to growth stocks, could possibly start to see a general shift after the election. Value stocks are completely torn up, like airlines and energy stocks and miners, by the way, that are completely oversold in their value and could definitely see a turn up coming into the election time frame. If we look at gold, gold has done some incredible work on this daily chart. I've got the year Camarilla pivots and the month Camarilla R3 that looks like we've kind of stopped at in the last a couple of trading sessions. We've dived up and then came back down. This is looking like, to me, one of those possible S waves that I actually talk about, that you have an initial huge impulse up, sideways kind of movement in the middle, and then another repeating pattern on the other side. And it is possible that we have that correction that I talked about leading into the seasonal correction in mid-August, and maybe make a higher high that is going to be possibly a bearish divergence. RSI is so overbought, but that's okay, because when it gets to these overbought levels, it's probably going to dive down a little bit and come back up and get overbought again, which would be a bearish divergence in the indicator, but the price went to a higher high and the indicator went to a lower low. Dive out of overbought, come back into overbought. If you look at the hour chart, it's a little bit easier to understand because the RSI was above 50 and stayed above oversold for a very long time. It did this since July 15th about, or July 16th. Whenever you see RSI or any kind of overbought oversold indicator like this hit an oversold, managed to stay above overbought many times and never come back down to oversold again, and then finally hit it again. Usually this is an indication that there's going to be an immediate bounce. So on Friday, I started buying back into gold on the close of this 1 hour candle at about 1 o'clock Eastern time, in anticipation of an almost immediate bounce. And that's kind of what we had on this candle. It closed somewhere around 2022 and immediately jumped up about 10 to 15 points or so. So when you see something like this, it means that there's huge amount of momentum in the price from here to here. And if it's going to hit oversold again, it's probably going to be an immediate bounce. And I would like to see an overbought condition again up here before I actually exit this trade, in anticipation for some sideways to down movement over the next couple of sessions. If we look at silver, silver went up against the R4 Camarilla pivot. And if we look at the weekly chart here on this, and I take off some of these pivots here, silver is just so incredibly overbought right here, but it can keep going based on the past. If you look at, well, let's pull up silver futures actually, because these goes back a while, I think. There we go. So here's the Nixon years where we had the currency, or not the currency, but the interest rate crisis, where 10-year yield was all the way up at like 17% or something at the top, which is just extreme inflation. Silver probably was way above actually 40 if you adjust for inflation. It was probably much higher than that, 30 years or 40 years ago. But you can see that when we do one of these big moves, it can go much, much higher than people actually think it can actually go. And there might be some kind of a mid-correction that we have in the middle of this. And the other time was 2010, leading into the top where it hit 50, and this is where CME kicked in higher margin requirements. So this is doing some kind of a similar movement here. And we could have some kind of a sideways movement and then keep going, but this is unsustainable in the long run. And I don't know where this thing is going. It topped under $30 just about. It almost hit 30 bucks, didn't quite get there. So silver to me is great if you're already in a long. If you're not in that long, it's risky to get into a long now because you have no idea where this thing is going to go before it could correct $3 to $5 in a matter of days. So it's at an interesting point. So I'm looking into seeing S&P 500 futures. Let's see, that open was just 15 minutes ago. And it looks like we're just kind of moving into maybe make a new high. I do like the candle that was on Friday. I like this little pin candle, but we'll see what happens. That's kind of my bias going into the next couple of weeks, that it's very possible we can see this trend continue and see some kind of a blow-off. And, reduce your position size, update your stop underneath. But definitely I am not committing into any big trades, and it's mostly scalping from here until the end of the month. All right, good luck trading this week.